Okay, traders, very quick one. People asking about gold, and I just wanted to show you. Let's go to a higher time frame. Look at the monthly. Look at the weekly. Look, monthly has changed, gone bearish, which is quite nice. We do have 4 days to go still, however. So weekly from last week where we failed and we rejected and we turned, having gone up during the bank holiday, made a good go at testing the 618 in terms of a retracement, and it completely failed and collapsed, which was kind of cool. So it didn't quite make it the 2k, but good area of resistance. Failed there, decided to turn on its head. And what's interesting here is when we look at this low. This low is incorrect as seen when we had the sharp sell off back in August last year. So I'm not going to use that one. It's actually 1667, so it should actually be a bit lower down. It should actually be here as seen on my charts. And the discrepancy is because what happened was we had some selling from some hedge funds. They liquidated their positions, and it caused, because it was such big liquidation of gold, it caused a big spike. So anyway, that's pretty much where it should be in terms of the low. But in terms of the high then and the range, that's all correct. 1916 provided excellent support. We had a 764 down around there as well. And if we drill down to like a daily, you can see that's what's happened today. Beautiful stretch, and broken a 764, which was our target. And let's just talk about this target and the reason why we use it, because it's so powerful and accurate. And also bearing in mind, if we're talking about fear and greed, it's almost like tricking my brain into thinking that I'm taking profit early, because what we're doing is, by taking profit at the 76.4 as a target, we're leaving 23.6% on the table. So we're leaving just over 20% on the table, because we're assuming that maybe it's going to do a full 100% retracement. So if we're getting to here, then in my view, we're not being greedy. So in terms of taking profit early on any move down, as far as I'm concerned, I am taking profit early by getting it down to here. So taking profit early doesn't mean taking it at 382, doesn't mean at 50 or 618. Take some off, yeah, but taking ultimate profit, T2, proper target. So T2 is not second target, if you like. It is the primary target. It should be referred to and made clear that it's perhaps a misconception when someone says T2. That is the target. And if we're looking at risk to reward, that is always going to be the target that we're basing our risk to reward on, in terms of when we're placing stop losses and everything else. Taking some off along the way, so a T1, that's to ensure that we are playing defensive at all times. The profit takes care of itself. We want to make sure that we are protecting our stop loss, so we want to move it to break even at the best opportunity that we can. And being proactive in how we manage our risk, we want to be able to then trail our stop loss. So there's a three-step approach, which I've pretty much labelled and reiterated. So if we drill down to the 4-hour chart, you can see that price hit our final target, got down here today, and it sort of stopped and consolidated. And you're starting to see some consolidation, and you can see that there. So it was thinking about going up from here, because it was at the 764. So we're thinking, okay, 764 strategy to the upside. Let's see a bit of a retracement. Now, in terms of a retracement, a 382 retracement is based on this entire move, this entire range. So just to be clear, that's how it would be played. That would be the target, 1945 to the upside, not this move, because it broke down from there. You wouldn't do it like that. You can add these in as additional fibs and look at, again, monitor the weakness. It could have gone up to like 28, which would have been a nice little target area to see, take some profit off and just see if it reacts, then runs out of steam and then starts selling off. But ultimately you would have been looking for 1945, but again, just to measure the weakness. So 1945 there, and then if we plotted additional fibs, this would have been what it looked like this morning. That was bang on. So had it bounced off there, it did actually give us some really, really good targets, useful targets to the upside. I wasn't too fussed about going long, to be fair, because we've already capitalised on this entire move down, and I made the most of this price action throughout the last week. A couple of trades is all I took, 2 trades on gold, but it was enough to give me some additional profit for the month. So absolutely fantastic week without doing much really. Now, people talk to me about how you trade this 764 strategy and why didn't it work, and I was like, okay, let's drill down and examine. So we would go to maybe 15-minute chart or a 5-minute chart and start really looking at price action. So you see prices holding 735 pre-London, it holds, it makes a nice little move up to 20 area, then it pops back down, and this is the London session just after 9 o'clock. It's found the consolidation and it's holding at the previous support around there. And so if we drill into that area and just examine this price action and put your fibs on, okay, and start looking at this, and then you see 764 pullback consolidation around 14.5, 15. So you want to take a long, great, take a long there with a tight stop. This is what it would look like. This is the first step. You look for a reaction. Step 1. Price is indeed reacting at this level. It's consolidating. That's what we're looking for at a key point. So we're not just trading any area just for the sake of it. No, we're trading, looking for a long off the 764 of a key range at 1915. It's a very important area. That's why price is consolidating and in effect thinking about what it wants to do next. That's our first step. Step 2 then, so we get in, or we look to get in here like that, and we're looking for that move up to where we said, you know, we want it to go to. We maybe look to take some profit off here like that, for example, smaller range if that's the case. But our stop loss, we're playing defense. Our stop loss, take a few positions, and our stop loss is going to be looking like, well, something like just not any lower than the low really, so around 12 initially, maybe at best, and you're getting in at maybe like 15. But the fact that it does a 50-60 pip pump up and it, you know, it goes up beautifully, it's retesting the previous high, and it goes and makes a new high at 21, just slightly above. What would you do there? Well, 50 or so pip move, you know, let's tighten the stop loss, let's do that. Or if your entry is really decent, just put it above, you know, if you got in just above the 764 or around there, put it to break even. What's a couple of pips? The fact that it's done that, it has no business coming back down here unless it's thinking of maybe going lower, breaking or rejecting. So step 2 ties in with, you know, you're looking at price. Did it react? Yes, it did. So step 2 is at the very least move your stop to entry if it's making a move to the upside, going up, and it's stalling like that and it comes back down. Think actually this might not work. It might need to wait a few more days or hours, or depending on what time it is, etc. Might have to wait for the US traders, you know, different variables to consider. But it's provided you enough of a bounce to help you be proactive enough to move your stop loss if need be. And in this case it had. So I would need to exit or move my stop to break even, you know, or get out here. What happens next is it comes back down. Look, let's measure this retracement. This is a cool retracement because it does, once again, pulls back, makes a slightly higher low, wicks down and starts stalling at the 764 of this range. So we could probably get rid of that and just look at this and say, okay, around about my entry, I might just leave a little bit, you know, just a little bit of wiggle room. Let's, you know, I'm in already on the first move, or had you missed it, you could get in again here, like that, for example. Again, in terms of stop loss, you could just keep it nice and tight down here somewhere. And because the idea being that if it breaks here after testing 1, so it came down already here, tested, rejected, so it looked good to go. So that should have been the go, because that's why it's so important to trade the 764 strategy on the first attempt, because the first attempt is usually the one which we look at to go up. So here it makes that clear move, it starts going up and pulls back a bit, 764, and then it goes. And that's it, let's go. That's our cue to get in, somewhere around here or here. Good, let's go. Stops to break even now. It has no business coming back down here. Then it tests it instead. It goes 1, 2, 3, fourth one, it just breaks. So in terms of protecting your stop, protecting your capital, you know, protecting your risk, managing your risk successfully, in terms of a stop loss, it was a no-brainer in terms of putting your stop loss somewhere around here, around your break even, just maybe like slightly below. It could have been something like that, for example. And you know, it could have been something like that. You know, maybe your entry was around here, slightly above, you know, 15 or so. So you're losing what, 5 pips, you know, something like that. So it's class that as a break even, really. That's how you would manage it. Step 3, because playing defense is your priority. Step 3, therefore, we've seen the price rally up on this setup to give you some sort of a T1382 correction. So really, we wanted to see this go up, or if it pulled back here, we wanted to see it actually go up. So it might have been 1, 2, third attempt to go up. And that's what step 3 is. And when it does that, then it's fine. Then if you haven't already moved your stop loss to break even, depending on the price action, you definitely look to move your stop loss to break even. And then the idea then would be to start trailing our stop loss. So, you know, if it went up here and it pulled back and then it stayed going bullish, we would then trail our stop loss, maybe tuck it in just behind this last pullback, for example. You know, and that would be step 3 in effect. So we start moving and trailing the stop loss. So it's a simple three-step approach, but you are looking at reaction and how price is behaving here. You wouldn't just have a stop loss down here. You wouldn't just let this go down here and you get stopped out. You wouldn't be holding longs on this move down because you think this is going to go up. You need it to go up. You need to get in. You need to control your risk. On the move up here, that's great. If it pulls back like it did and then it finds some traction and it starts going up, then you can add a position, you know, and move your stops to around here and add your position, maybe add a bit more risk. So if you've got 0.5% on the table, add another 0.25%. That's what I do. Maybe add a couple of more little positions as it's going up and then start looking for a decent retracement. Because then when it starts pumping, you see it makes a nice retracement. It'll make a nice move. You get involved and you start trailing the stop loss and you make a couple of percent on that move without too much drama. So that's how I would play it. That's how I always play it. That's how I do it in all the videos. That's how I document it. You just have to pay more attention, closer attention to the detail, closer attention to how I am trading, and that's how I trade it. I don't just put a trade on and leave it. I'm not a robot. I'm not an EA. I don't just leave it alone, and I have to kind of manage it. If it's not doing what I want it to do, someone was asking me the other day about cutting losses. That is in effect that's what I take from my understanding of cutting my losses. It's about saying, you know what, this is not working. Let's move the stops to break even. Let's exit around our entry. Let's step aside a minute and just leave it because it's not doing it. It moved 50 pips in our favour. It looked good at one point. It's come back to our entry. That's fine. Cut our losses. But certainly no stop losses is wrong. Certainly letting this go down like this is wrong. It's breaking a key support. You'd be naive just to let that run down and allow your whole account to be blown because you don't know what you're doing. And so hopefully this video does provide some insight into how we do it. If you have any questions, please ask.